Hello and welcome to the look ahead for Tuesday, the 14th of May with me, Fiona Cincotta, Senior Market Analyst here at City Index. So first up tomorrow, we've got UK unemployment data. Tomorrow we also have German ZEW economic sentiment. OPEC will release its monthly report. And in the US, we've got US PPI, as well as comments from Federal Reserve Chair Jerome Powell, who is due to speak. So, just kicking off with UK employment data. Now, we're expecting the unemployment rate to actually tick higher to 4.3%, up from 4.2%. And the number of people looking for jobless benefits is also expected to rise to 13.9,000. But the main focus, I think, is going to be on average earnings, and average earnings are expected to decrease slightly to 5.3%, down from 5.6%. Now, the Bank of England is going to be wanting to see that growth in wages is cooling. That's been a hurdle for the central bank as it looks to cut interest rates, and it's been one of the reasons it hasn't been so keen to move sooner to cut rates. So if we do see a real significant cooling in wage growth, that coupled with the idea that inflation in the UK is also cooling towards that central bank's target of 2%, will mean that there are less obstacles for the Bank of England in order to cut rates for potentially June, if not August. We've just had that Bank of England meeting last week. It was a slightly more dovish vote, with two voting to cut interest rates. Since then, we've heard from the chief economist, Hugh Pill, who has also said that he does see rate cuts coming soon. But we've also had strong GDP data from the UK, which has helped the rebound in the pound, and we've also been seeing some weakness in the US dollar at the start of the week as treasury yields fall. Now, what does that mean for the GBP US dollar? Well, it's actually quite an encouraging technical picture that we're looking at here. The pound has broken out above its falling channel, and it's just testing at the moment the 200 SMA. That's at the 125.40 level. Now, if we get a rise above here, then we could be looking for a move up to 126.30. That is the May high, also around the 100 SMA level. Beyond there, look towards 127. On the downside, if we find that it doesn't manage to break out of that to above the 200 SMA, then we could see support come in there at 124.50, which is the May low. And then below there, look for the 124 level. Now, just what else we'll be looking at tomorrow? I said we've got German ZEW economic sentiment. There is also German inflation data due tomorrow, but it's the second reading, so it's looking to confirm that inflation cooled to 2.2%. But as far as the economic sentiment is concerned, we are expecting that to improve. It's expected to rise to 46.3, up from 42.9. We've actually seen that the sort of sentiment data coming out of Germany and the Eurozone as a whole has actually been improving and brightening, suggesting that we could be towards the end, or in fact, the recovery is starting to take place. Now, I'm just pulled up here the German DAX. Now, this has just hit another fresh all-time high at the end of last week. Now, the DAX has been supported not only by expectations that the ECB is going to be cutting interest rates soon, but also the fact that we have seen the economic data sort of show signs of a recovery in the Eurozone region. Levels to be looking out for now, the DAX has taken out that 18,650, which was the April high. Looking towards now 19,000 would be the next logical level on the upside. As far as support is concerned, immediate support can be seen there at the 18,650, as I said, the April high. That's just below that rising trend line that the price has managed to push above. Now, if we do get a break below the 18,650, then that brings in 18,200, which is the late April high, ahead of 17,800, which is the May low. Now, so just moving on, there's a lot going on tomorrow. We've got the OPEC monthly report. Now, this gives us some clues about sort of how OPEC views changes in demand and supply, and it comes just ahead of the OPEC Plus meeting at the beginning of June. So maybe that'll start to give us ideas whether OPEC will look to extend those voluntary cuts. Now, there are reports that they are looking to extend the voluntary cuts into the second half of the year. However, we do know that over the weekend, Iraq's oil minister suggested that they weren't in favor of extending those cuts. Now we can see oil is trading here. It's trading in this falling channel. We've seen that risk premium come off oil as the situation between Israel and Hamas seem to be improving, or they seem to be moving towards a ceasefire, although that does seem to have stalled recently. Also, concerns over higher interest rates for longer in the US has put downward pressure on the oil price. Now, as far as levels to be watching, it's broken below the 80 round number and is just sort of testing really that rising trend line support, which goes back to the end of last year. As far as levels to be watching, look out for 77 on the downside. That's the May low. If we take out that May low, then there's not too much before 75, which is the mid levels that we saw tested in mid-February. On the upside, we're going to need to rise above the 80 in order to push up towards the 83.10 level. Now, just finally, and maybe most importantly, we've got the US PPI data, which comes out ahead of the CPI report later in the week. Attention is going to be very much on the CPI report, PPI report, and also commentary by Federal Reserve Chair Jerome Powell. Now, Jerome Powell could give some clues over whether we're going to be looking to rate cuts this year. The Federal Reserve meeting earlier in May was a little bit more dovish than what the market had been expected, but it all very much depends on what inflation is doing. We've obviously seen that weakening in the jobs market, and with jobless claims last week higher than expected, and also US non-farm payrolls were softer than expected. But what we'll be watching out for is, the PPI level. Now, PPI is expected to rise 0.3% month on month, 0.2 up from 0.2%, and on an annual basis, 2.2% against 2.1%. So, I mean, that's, unless we get particularly hotter than expected data, that shouldn't really cause too many worries. But if we do see hotter than expected inflation, then that could raise concerns over the Fed's ability to cut interest rates this year. Now, just having a look here, this is gold. Now we can see gold is just holding above, it trades above that rising trend line support that goes back to earlier this year, around March time. The prices tested lows of the 2280, and it's pushed above 2300, and is currently trading middle of that 2300, 2400 range at around 2350. Now, buyers are going to be looking, first of all, to take out Friday's high, which was the 2278. Above that 2378, above there, 2400 comes back into focus. On the downside, watch out for the support level at that 2300. If we get below there, and also 2278, then that's going to create a fresh lower low and could point to a further downside. I hope you enjoyed what you've been watching. If you have, then please do give this video a like. And if you would like to see more videos like this, then please do subscribe.